Okay, so let me just cover a quick disclaimer first. Okay, please note that this webinar is purely for education. It does not take into account specific investment objectives, financial situation, or particular needs of any other person. Okay, so let me just cover some theory for those who are new. I think for those who've been here many times, you're probably sick of hearing this. But I just need to ensure that everybody's on the same page before I go to live market. So one thing that I always use is price action, which means understanding which phase the market is going through, whether it's a long-term chart or short-term chart. And once I understand this, that's where I can set my bias and plan my trade accordingly. Okay, so basically the whole trading process is I use the charts and price action to form a bias. All right, sometimes using a bit of fundamental factors as well. And then I start planning the trades once I have the bias by stacking the odds. When I say stacking the odds means I'm trying to find multiple confluence levels using different things like support and resistance, chart patterns, indicators, multiple time frames and things like that. Okay, and then if I plan to enter, of course I calculate the risk to reward. And after that, it's all more for trade management. Okay, so this is basically the whole trading process. Now, I want to focus a bit on price action theory now. So if you notice that, if you look at any chart, right, in terms of price action, so what I have here on the left-hand side is, if you're looking at a chart on uptrend, basically the market is always making new highs, or there's a breakout to new high. And on the right-hand side is showing if the market is going on the downtrend or breaking out to the downside. Okay, now what I covered a bit, let me see whether I can shrink this. Okay, what I covered a bit the past 2 weeks is two things. Now, last week I covered false breakouts. Okay, false breakouts are something very, very common. Now, this week I want to focus a bit on false breakout, a bit more false breakouts, and show you some live examples because it's happening a lot these days. And for those of you, for the benefit of those who didn't attend last week or did not watch the recording, here's what I mean. So when I say false breakout, it's a very simple explanation. Basically, the market is going up. It breaks out from for this case, is resistance. Okay, and then only for it to come back down here. Okay, and start going down. So this is a false breakout to the upside. This. Okay, it can work the other way for support as well, but for this case, it's resistance. And if you notice, right, let's say the overall trend, let's say you establish the overall trend on the daily chart is to the downside, and maybe this is your 15-minute chart. Okay, this is a perfect scenario for you to go short, to join the daily trend, because a false breakout means that the bullish or the bulls in the market, okay, tried to break out to go against the higher term trend, only for the big money traders, the big liquidity, to push it back down. And they're all bearish, isn't it? So when the false breakout happens, right, it's a very clear sign that the market is still, for this case, is still bearish. Okay, because the bulls tried. The bulls already tried, but it didn't work out. So I really like false breakouts, especially if it's in the direction of the longer term trend, because it gives you an understanding of the order flow. And if you talk about price action, if you talk about technical analysis, it's all about order flow and sentiment. So if I see a setup like that, so how do you enter based on a setup is basically, let's say I draw this again, the market try to break out, and it comes back down. So this line, this resistance is a key line. First, you need to establish what's the key level first. Okay, but if it breaks back, if it breaks above and breaks back below the key level, if it goes back there, this is basically a good level too. Take a shot and hopefully it comes down up here. Okay, the reason why it's a good setup is because you can measure the risk. So your risk is just above the previous high, and then basically can target new lows on the high term time frame because the bigger overall trend is still down. Okay, so this is just one way to enter a trade using a false breakup strategy. Yeah. Now the other ways that I've been talking for quite some time is basically, let me just bring back this slide. Let me just take this line away. Okay, it's basically all this. So whether you're long, if you're long, right, you want to look up for this kind of pattern. So for example, you see this double bottom, higher high, higher low, and you go on the long side. For this case, it's a bit tricky. It makes a new lower low followed by higher high, but when it makes another higher low, you go long. And for this case, more straightforward, just series of higher highs and higher lows. Vice versa, same thing for the short side. Okay, so essentially these are all how you enter and how you want to enter the trade once you establish a bias. Okay. Okay, if you have any questions, please shout out. Yeah, I just thought to cover a bit of theory and then I go live markets, and then if the live markets show what I just explained, that'll be perfect. Okay, so today I want to emphasize a bit more false breakouts and so how to enter and things like that. Yep. So let's start with the indices. Let's see. S&P. I'm not a big fan of the US indices right now. It's doing nothing. Yeah, I mean, there's so many better markets to look at, to be honest. But let me just take you to the S&P, just because it's the most liquid index in the world. Okay, so you can see S&P, I mean, this is a daily chart, slightly long term. Right now, I would say we entered some form of a consolidation phase. It's not the best looking consolidation. What I can see here is, you can see this nice little trend line, which has been resistant since May last year, and now it's potential support. Let me just zoom in a bit more. Okay, so you can see, I mean, you can even draw a little channel like that. Let me just adjust this a bit, sorry. Okay, you can even draw a little channel like that. So what you want to look out for is, right now, there's nothing much to do. It's neither at a strong support nor strong resistance. Yeah. If you're bullish, I would rather let it clear above 2370 first. Okay, go above 2370, then maybe you can take it back to the previous high 2400. If not, most probably you'll start drifting back down to maybe this channel support around the 2320 area. Okay, so if you look at the lower term time frames, right, let's go to 4-hour chart. Okay, you can have a better picture of this channel. Yeah, so you can see that the market is supported by this trend line that I drew, but if you're bullish, I would rather let it break this level here first, 2370. Okay, if you want to trade a shorter term kind of intraday kind of trade, then you might want to see break 2345 first, and then maybe trade it back down to the channel support somewhere here. Okay, I'm not really touching the US in this right now, just to, I'm not a bigger, it doesn't look as clean cut as I like it to be. Okay, there's so much better opportunities out there. So if you see the S&P, okay, it's basically consolidation mode. So when consolidation mode, you just need to know what's your key support and resistance, and trade it accordingly. Yep, that's S&P for you. Let's move on to the DAX. Now, if you look at the DAX, right, seems like a much easier trade because it's on the uptrend. Let me show it to you. Where is my DAX? Here you go. Okay, so if you see a DAX compared to S&P, you see a difference? Okay, the difference is that the key resistance has broken cleanly, I think last 2 weeks. Yep, the key resistance was around the 12,100 or so. Very nice bullish breakout to the upside, and right now we're back to the support area. Okay, so DAX definitely on the upside. If you look at the 4-hour chart, what I like is that we are back to this zone, which is support. Here, you see that? So really nice support zone, which I think might react from. Okay, so anywhere between 12200 and 12250, that's support for you. If we go to a lower term time frame, you can see that, oops, sorry. Okay, sorry about that. So if you go to a lower term time frame, okay, we can see that it's supported by the 50-minute chart as well. Okay, if you look at the number of touches here, basically like almost like a double bottom. So the bias now is bullish. Okay, I'm more bullish than on the DAX right now. And if you're going to plan the trade to the upside, that's where you can use a shorter term time frame like the 50-minute chart as your trigger chart. Resistance is here, and support is here, which I drew already. Let me just delete this circle. Okay, so the way to approach this is, one, if it comes back to the support level here, okay, that might be a good level to get in. Stop loss below this swing low, the previous low. Or if it breaks above this resistance, anywhere above 12260. Okay, if it breaks above there, then the 15-minute will start trending up and most probably will at least go to the previous high somewhere around here. Okay, that's about 100, 150 points on the DAX. Okay, but it's definitely much cleaner than the S&P. Okay, but it looks bullish. In fact, look out what happens when the US market comes in about 9:30 or so. Okay, so just take note, the DAX looks quite bullish to the upside. Okay, moving on. Let's go to, hold on, let's go to Hang Seng. Okay, so if we look at the Hang Seng, right? What do you guys think? Do you think this is bullish or bearish to you? Bullish. Yep. Sorry, I take some water. Yep, bullish, definitely. Now, it is bullish. Okay, it is bullish because if you see the overall scheme of things, it's a nice series of high highs and high lows. Okay, and what I like right now is we're sitting right smack at the support area at around 24,145 or so, about thereabouts. Okay, so it's beautiful right now. So in terms of bias, yes, bullish. Okay, this is a daily chart. Let's zoom in on lower time frame chart. Okay, so what I'm trying to do is I'm trying to go through step by step based on how to plan trades, starting with forming the bias on the high term time frame. So my high term time frame is normally a daily or 4-hour chart. You do not need to follow me if you are a shorter term trader. So for example, if you're a scalper, your high term time frame can be a 15-minute chart even. So that means you start from the 15-minute chart analysis and then you scale down all the way to 1 minute before you enter. Okay, so it depends. It depends on what kind of trader you are. But the key level to look out for if you're bullish on the Hang Seng like me is the 24145, 24150 area. If you look at the 4-hour chart, you can see that it is consolidating in some form of a bullish flag. See this? Okay. The only tricky thing is this. Now, remember I told you 2 webinars ago. Okay, 2 webinars ago. Let me just go back to a bit of theory now. Okay, 2 webinars ago, I did mention the type of consolidation pullback and how to trade it. So just a quick refresher. When the market has established a trend, so let's say uptrend, okay, the first way that it tends to consolidate is a counter trend consolidation pattern. Okay, this is number 1. Number 2, uptrend, consolidate, making slight higher highs and then continue. So that's number 2. Number 3, uptrend again and then consolidate in a horizontal kind of pattern. Okay, now among all the 3, the one with the least momentum to the upside based on the uptrend, or the one that is toughest to trade, is, what do you think, 1, 2 or 3? Which one of these 3 setups do you think is the toughest to trade along the trend, not counter trend, yeah, along the trend? So which one of these 3 setups do you think is the most difficult to trade? Yep, most of you got it right. It's actually number 1. Okay, because number 1, if you notice that, let's say if your trend is based on the daily chart, if you zoom into the shorter term charts, right, this area here on the shorter term chart is actually a downtrend. So there's a lot of counter trend momentum there. So you have short-term bears fighting your long-term bulls, and that's why it's a bit more difficult to trade. And sometimes you notice that when you think that this support is a level that it will start going up from and you enter a buy position here, Okay, what happens next is that it will just keep coming down and down and down. And then you're scratching your head, say, where are the bulls? I thought it was uptrend. Okay, I'm sure it happens to some of you before. So because there's a short-term counter trend fighting against the longer-term uptrend, that's why it's a bit tougher. Now, 2 is easy in the sense that the momentum is so bullish that even when the market is consolidating or correcting itself, it does not even go against the trend. And this kind of pattern, you always see it in yen pairs, especially when it's trending. I mean, one case in point, if you look at dollar yen, I think, when he had the rally late last year, no particular pullback, it just keep going on and on and on. And if you miss all the short-term pullbacks, you wouldn't have entered the uptrend at all. Okay. In fact, you can see the same thing for all the yen pairs for the past few days, except that it was in a downtrend. So you see a lot of yen, like euro yen, dollar yen, it keeps going down, 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 not much retracement. In fact, the retracement was in the same direction, the trend, and the market kept falling. Okay, that was a downtrend example. So 2 is relatively easy. 3, it's also relatively easier because it's very defined in terms of levels. So what I mean defined means horizontal consolidation. You have a very nice support and resistance, and actually it can give you multiple level of entry points. So for example, if you consolidate horizontally like that, an uptrend on the support, you can buy here, and if it actually breaks out again, you can actually enter another breakout. Okay, so I mentioned this 2 webinars ago. This is basically how the market consolidates and which ones are easier. So back to the market. So the Hang Seng is doing this kind of consolidation at the moment, number 1. So you just got to be a bit careful because you want to make sure that the bulls are back in the fray before jumping in again. So let me just delete the drawing. Hold on. Okay, so go back to my tool. Okay, so for this case, if you look at the Hang Seng, let me just go back to the perspective here. So if you look at the right side, the daily chart here, uptrend, isn't it? 4-hour chart, consolidating in a channel. So some of you can say, isn't this a bullish flag pattern? Yes, it is a bullish flag pattern. But I just want to be extra careful when I'm trading a bullish flag pattern, especially if it is in the middle of the flag right now. Okay, especially if it's in the middle of the flag. If it's near support level, let's say 2410 ohm, I think the risk to reward is still quite good. But now it's the middle, I'll be extra careful just because of the nature of the consolidation. So it's a counter trend consolidation. So my preferred level to enter is support around here. See all this level support here? So about near the 24100 level. Alternatively, I want to let it cleanly break this level here first. You see all the support, resistance, blah, 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 blah. Okay. So it's either it comes back down here so that I can cap my risk to reward. Okay, my risk can be below the previous swings here. So I see my stops. Or I let it break this key resistance level, break above 24250, then I jump in. But anywhere in the middle, not too keen, just because of the risk to reward point of view. Okay, and if you look at this particular chart, right, okay, so remember I was covering false breakout in the beginning of the webinar, the theory part of things. You notice that this is an example of false breakout. So you see this is a really nice support, this is nice resistance. The bulls tried to push against it, try to break above it, only for it to close below. Okay, this is an example of a false breakout. But this is not the most straightforward one. Why I say that is because it's not really with the overall trend. Overall trend on the high-term time frame is bullish, but this is actually a towards the downside. Okay, but this is an example of false breakout. All right. So there's a Hang Seng for you. Just take note of that. Let's go on to Nikkei. Okay. Now, look at the daily chart Nikkei. Nikkei is just consolidating the one big fat channel. This circle I drew was what I covered 3 webinars ago. Okay, and the reason why I circled there is because I say that this is a very strong resistance level. Okay, one of the strategies that I use is basically placing a limit order on a longer term support and resistance level, especially on the daily chart where the levels are really, really strong. Okay, support and resistance levels. So if I see something like that, and if I see it being rejected, let's see if I zoom out, I can see any more resistance. Not much. Okay. So if I see all these touches, look at this, from December last year, January this year, March this year, many touches couldn't break. Okay. What you can do is you can actually just place a limit sell order. Your stop loss is above the previous swing's high, or basically the highest point of this resistance level. So the highest point would be maybe this swing happened in January this year. Just put a stop loss above it, and then from there write it down to the next support level on the daily chart. Okay, this is I mean, some of you might think that just placing a limit order there might be very risky, but if you look at the risk reward, it's really good probability. Okay, it's really good probability. Any one of you know which FX pair did the same thing as the Japan, as in Nikkei 225? I did mention this FX pair for the past 2 webinars, or past 3 webinars instead, that has tested the key resistance level on the daily or weekly chart, and has since came down from there. Any of you know which FX pair? Exactly, Univas, Aussie dollar. Perfect. Did you attend the webinar when I covered it 2 or 3 weeks ago? Or more than 3 weeks ago, I think 4 weeks ago. Yep, so such charts, right, especially on the daily chart, if a level is so expected and it's so clear for everyone to see, okay, it presents a good risk to reward setup for you, for a trader basically. And daily support and resistance levels are really, really nice. Really tradable. And of course you need to do your position sizing because it's a daily chart, right? So the movement, sometimes your stop loss, you need to give a bit more breathing space. But even though it's on the daily chart, right, if you enter a nice area and your stop loss is above the swing high, your risk reward is still very good. So for this case, if you would have traded this pair based on that strategy, right, your risk to reward will be, you probably reach the max 200 points. And right now you are up like what, 6 plus 2, 800 points. Okay, 1:4. That's really good risk to reward on the daily chart. All right, so something for you to think about. So right now where we are, neither here nor there to be honest, because in the longer term chart, things is going to test the previous key support level. There are actually two key support levels to look out for. One is around the here, which is breach. The next level is around the 18,600 level, around here. Okay, so just a big fan consolidation on the daily chart. Now if you look at the 4-hour chart, okay, the only setup that I could have seen was maybe yesterday when it broke this this area. Let me just delete some of the lines, a bit messy. Yep, when it broke this support here. This was a pretty decent trade. I think it broke along with all the yen pairs last night. I was looking at it. I was looking at yen pairs, not the Nikkei. But yeah, it broke downwards. Right now, nothing much because the lower it goes and the closer it goes to support, right, the less probability of it coming down further. So I'm not too keen because you see the support this year, it barely touched it yesterday and it bounced back up. Okay, I prefer to trade when it's a fresh break. This to me is not more a fresh break anymore. It's a bit stale. So yeah, I'm gonna leave this out for now. But just take note the support levels is around 18,680. Okay. Now some of you might ask, if I say the same for the resistance in terms of placing a limit order there to sell, would I do the same at this support level around the 18,670? Okay. The question is yes and no. Now, it's still a valid setup, but I'm not that keen on it because the number of touches is not as clear as the resistance. So if you look at the resistance, right, there are many times whereby, okay, it touched at least 1, 2, 3, 4, and 5, 6 times before it came down. but in terms of support, it's not as clear. Okay, so it's a bit of a higher risk trade or lower probability, I would say. Because at the end of the day, trading is all about probability, isn't it? I mean, some clients, when I explain this strategy to them, the question that they ask me is, what if, for example, this example, for example, let's look at the resistance, right? Let's say if I short here, some of them ask me, the question is, what if the resistance breaks? Okay, I mean, it's a valid question, but if somebody asks the question, it means that he or she does not accept the probability in trading. Because what if it breaks? I don't know, because it might. And what, as a technical analyst, right, what I'm trying to do is just to paint the high probability setups for traders to look at. And there's still every chance that the market might go otherwise. Okay, so that's where we have our stop loss, guarantee stops to protect ourselves so that our losses is capped based on risk percentage. But when we have winners, it's always more or bigger rewards. Okay, so this is just something for you to think about. So that's Nikkei. Oh, I have a question here. Srinivas, there is a break of a long-term trend line here. Okay, maybe I'm missing something. Thanks for pointing that out. Let me have a look, yeah? I know what you're talking about. Are you talking about this trend line here, Srinivas? This one here? Is this what you're talking about? Even longer. Okay, let me have a look. Talking about this one. Okay. Okay, Srinivas have, let's call this the Srinivas trend line since you pointed it out. Okay, thanks for pointing that out. So what Srinivas is saying, that there's a break of a longer term trend line support, which is spot on. Okay, I missed this trend line. Okay, but even if I miss this trend line, there's no denying that we are at support here around 18670. Okay, so if you are going to trade the break of a long-term trend line, which is a valid setup, I think a better place to trade if it clearly breaks this support first. Okay, because this is still a visual support. Now, in terms of support and resistance, right? I used to trust trend lines a lot, but I realized at some point on my trading, especially on the higher term time frames, right? Trend lines can be very discretionary. Okay, so a trend line is just a guide, but what I'm looking out, what I'm focusing more on is visual or horizontal support and resistance levels. Okay, so for this case, yes, the trend line is a very nice trend line. It has broken it. Okay, you just need to make sure that you're not entering at a horizontal support level. Okay, so if you are planning to short, okay, at least a pullback back to the previous support term resistance anywhere around the 18,800 level. Okay, thanks for pointing that out, Srinivas. Kunath, your sound gets interrupted. Any one of you having difficulty with the sound? Because if not, Kunath, you might want to just restart, as in exit and come back in again. And then I hope that helps. Roy, you have a question. Let me see. What is the reason? Okay, Roy has a question here. What is the reason behind, and then he quotes me, if the resistance touches 5 to 6 times, the next one is high probability. Why is it automatically qualified as a high probability trade? Two things. I think just based on how many traders can see it, because technical analysis is a self-fulfilling prophecy, right? So whether you are sitting behind a proprietary trading desk, a hedge fund, a bank, or just a retail trader, we are looking out for the same thing. Where are the buyers and the sellers? Okay, where's the momentum? Where's the order flow? Where's the sentiment? So the more times you see it touch a level and being rejected, it just shows the order flow. It shows that there's a lot of bears, or there's a lot of sell orders sitting around this 19,700 area waiting to short every time when the bulls try to bring it back up. So the more number of times it touches, it just increases the probability that that level is respected. Okay, and I'm more than happy to always try to take shorts if a resistance shows itself as being like that until it breaks. Until it breaks. Because if you're using price action, right? I mean, I used to have a saying when I started trading many years ago. To be a good price action trader, you need to follow price action like a dog, as in DOG, because a lot of times our psychology and our thinking gets in the way. And when price actions, for example, if it's a nice downtrend, right? Instead of following the downtrend based on price action, many a times our mind will come in and say that, you know what, maybe it's too low. Maybe it will bounce up already. And then we miss out a lot on these beautiful trends that keeps running and running and running. Okay, I'm not sure whether any of you encountered this before, but a lot of times our mind gets in the way. So for example, in this case, if this is a very clear resistance at around the 19,700 level, right? Until it clearly breaks, then I'm convinced that the bulls are in charge right now. But if not, I'm just going to follow the support and resistance, and that's why and the number of touches and the price action, which gives me a high, which make me think that it's a high probability setup. Yep. And of course, the risk to reward is really, really, really good as well. And most of the time, if our thinking gets in the way, right, most of the time, more often than not, is because either we are risking too much or we are not able to accept the amount of money that we are risking to enter the trade. So if you find yourself questioning a lot, even though the setup is right there in front of you, then it might be because of psychology. Yep. So yeah, Roy, you're right. I mean, it's market psychology. I mean, if you can see it, I can see it. If everybody can see it, most of us will do the same thing, and that's why the market will come down. It's very strong resistance level. Did I answer your question, Roy? Okay, so if I mean, at the end of the day, just one thing to add. Sorry, just one thing to add based on voice question. One thing to add is at the end of the day, you want to stack the odds in your favor. So part of trade planning is once you identify a bias, you want to find as many reasons as possible to give yourself the highest probability trade. So it might not be only support and resistance. It might be indicators. It might be multiple time frames. Whatever tools you're using, it's just about stacking the odds. Yep. Okay. Where are we now? So Nikkei is done. Yeah. So Nikkei, just keep track of the support level and see whether this downtrend can continue since it's broken a key support trend line. Okay. What's next? Any more index? Is there any other indices that you look at before I move on to FX?